Good morning and welcome to Blain's Morning Porridge. It's February the 3rd, 2026. This morning, we have to talk about Kevin. And let's start off with a quote from Kevin Warsh, who's going to be the next Fed chairman. I would say Fed policy has been in some sense reverse Robin Hood. The nomination of Kevin Warsh as the next Fed chair has been rationalised as positive for stability and for managing Donald Trump. But will a new name on the desk mean certainty will return? Nothing really changed within the administration. Trump remained Trump's, and he has a massive war chest to fight the coming bitter midterms. There was a relieved nodding of heads last week when Kevin Warsh was announced as Trump's nominee for the chair of the Federal Reserve. Most Fed watchers immediately spotted the multiple inconsistencies that swirl around the appointment, and they sought to rationalise them in a positive fashion. Warsh is an inflation hawk, highly critical of quantitative easing, that's the manipulation of interest rates through bond buying, who wants to shrink the Fed balance sheet, which means quantitative tightening, selling down its stock of bonds, while Trump, of course, wants a submissive Fed chair who will ease, and ease again. And a consensus swiftly emerged of how Trump had been persuaded to appoint a credible Fed chair, concluding Warsh was the necessary people skill manager to manage Trump's assaults on the Fed's independence and the potential damage that he can do to America's financial standing, the dollar, and critically, the Treasury market. Warsh is already squaring away the problematic hawk versus dove cycle by arguing that the massive productivity gains that AI is going to make will create and allow lower rates. He says he's focused on data, but AI gains are thus far largely anecdotal. So how's that really going to play out if the AI boom fizzles and an Oracle debt crisis triggers a run? That will be an interesting one for Warsh to explain. Who knew that the Fed chair's primary function would be to manage the president's monetary policy demands? But I guess that's authoritarianism 101. Now, Warsh is being seen by the market in the same kind of way that they see his former colleague in Stanley Druckenmiller's funds, Treasury Secretary Scotty Bessent, who is currently perceived to be the adult courtier in Trump's inner closet, mellowing the petulant president's worst financial tantrums, outbursts, demands, and protectionist instincts. However, there are stories, notably in Forbes, that Bessent wasn't keen on Warsh for the job, apparently fearing that Warsh's film star looks, according to Trump, might tarnish his own luster. What is clear is that Fed is going to change under Warsh and Bessent as Treasury Secretary. Last year, Bessent railed against the Fed's apparent gain of function since the last financial crisis, and Warsh is arguing for a reduced scope for the Fed's oversight. He wants a new accord with the Treasury which will allow the Fed to focus on setting rates, while Treasury would focus on bond issuance and yields. And that could get really gnarly if AI productivity gains result in zero US jobs, but that would allow lower rates. Now, I give credit to Warsh for his objections on quantitative easing. Bond buying and ultra-low rates caused massive distortions in the way the economy and markets work. The QE era did not create jobs, growth, or new capacity in the US economy or anywhere else it was tried, but it focused investments into financial assets, and most companies embarked on stock buybacks, creating the income and opportunity inequalities that have fostered and enabled the MAGA Trump populism movement and still overvalued stock markets. And if you want to understand how that works, during the QE era, the US economy effectively doubled in size. That was 15 years. In the same period, the stock market quadrupled. Interestingly, though, US economic growth went from fairly slow 1 to 2% into overdrive. We're currently expecting 5% plus this year, following the end of quantitative easing as rates normalized. They're currently around 4 to 4.25% for 10-year yields, suggesting that a healthy level of inflation and rates is actually good for the economy. What I can't understand is why Warsh is so fixated on reducing the Fed's balance sheet through quantitative tightening. The Fed still holds about $3.5 trillion of US treasuries and even more commercial mortgage-backed bonds, which would simply mop up liquidity in the economy if they sell them and cause the yield curve to steepen. It's already at its steepest in years, which would make mortgages far more expensive, thus hitting Trump's standings in the polls. Of course, it might just be that Warsh has been making noises about supporting quantitative tightening to sound hawkish and distract markets from whatever deal or promises he made with Trump about easing in return for the job, just saying. However, the talk of an adult-in-the-room Fed chair may be missing Trump's own often excellent political instincts, which are honed by his inner core of Project 25 extremists, led by his closest political advisor, the fearsomely single-minded Stephen Miller. And if you really want to scare yourself, read Rolling Stone's takedown of Miller last week, the worst White House aide in history. It describes Miller as the ultimate authoritarian aparchick. Trump will be very aware that his voter base threatens to slip away and has probably figured out for himself that he needed a Fed chair the market can literally rally around. In the run-up to the November midterms, Trump needs the upside of continuing market strength and repeated record levels to generate that critical feel-good factor that will help him through the polls. But the economic picture in the US isn't near as rosy as Trump would like us to believe. It's becoming increasingly clear that US manufacturing and productivity outside the AI infrastructure boom is actually flatlining. People are asking where the $1 trillion that Japan apparently promised to invest in the US actually is. And Trump's blatant lies about the US economy are becoming frankly embarrassing. Last week, in an opinion piece in the Wall Street Journal, he wrote in bragging tones about how his tariff policies were working, leading to zero inflation, rising real incomes, cutting the deficit by 27% and the trade deficit by 77%. And all these claims are easily debunked. In fact, in November, the US trade deficit soared 94%. But the biggest factors at play in the US may not be anything to do with Trump's handling of the economy. It's the fact that Trump has amassed a record 430 million war chest from crypto firms and tech billionaires to fight the midterm elections. In return for donations, Trump has been more than willing to open regulatory doors, especially for crypto, in enabling stablecoin adoption, which poses all kinds of regulatory risks. Now, I'm quite sure that some crypto shill will tell me that's rubbish, that stablecoins are safe. Yeah, but so is the dollar, or maybe so was the dollar. Now, Trump's targets at the midterms will not just be Democrats, but any Republicans who have upset him or threatened to step out of line, and there are already a few names in the frame that he will actively campaign against who are Republicans. But why would a second-term president need such a funded war chest pile? That's a really good question. And the answer can only be that it's to maintain his grip on the party. The sums that have been pumped into Trump's control were detailed in the Financial Times last night when they published an article about tech billionaires fueling Donald Trump's $430 million haul ahead of the midterms. But the scariest thing I've heard in recent months was talking to California bankers when I was in Austria last week. They were concerned as to what might follow a Democrat clean sweep in November, which is currently only a 30% probability in the probability markets. One told me the next insurrection will be better planned and properly organised. That doesn't speak well for the coming elections. Anyway, out of time, and it's time that I went back to my day job and caught a train. I'll be back tomorrow with something completely new, and you can find the Morning Porridge every day on www.morningporridge.com. Thanks very much for your time, and I'll be back tomorrow. Cheers.